And so now we're going to hear from attorney Renee-Marie Smith.
Thank you very much. Just a brief synopsis of who I am. I know in the pamphlet it explains. I am a huge homeowner advocate. I've been working in the distressed property industry since 2007. I've had the pleasure of traveling around the country and talking to homeowners as well as agents who have been struggling through this market. So I'm pleased to be here today. I'm going to do a very brief overview. I know Robert after me is going to talk a little more about the local market, but I wanted to talk specifically about what I'm calling the fractured Miami real estate, just because we really highlight what's going on nationally, and I think it's really important for all of us who are real estate professionals to understand. First off, my talking points and my goal today are watch the numbers, not the language. There is a vested interest, especially in South Florida, for developers, contractors to continue this idea that we will all be, lighting cigars with $100 bills for the next few years. Really watch the numbers for yourselves and your clients, because the reason I'm encouraging you to spot trends, in 2007, 2008, I think everybody nationally got caught with their pants down, okay? One of the things that the last few years have done is educate us, okay, as local professionals for ourselves and our careers, to ensure that we have stability as well as for our clients. There's a huge responsibility, in my opinion, being a real estate attorney and working with homeowners who really didn't have the tools on how to deal with the distressed property market. It's been my goal to work with all of you who are the front line to make sure that you're educated and can pass that on. And the last thing, my goal today, is to acknowledge what a lot of people don't want to acknowledge, that is still happening in the real estate market and is definitely happening in Florida, South Florida specifically. So with that said, we're going to move to the next slide. Three big markets here. Obviously, we have new construction. Okay, you can't pick up a glossy magazine anywhere in South Florida and not see beautiful multi-million-dollar new projects happening all over. Existing real estate resale, obviously, whether it's homeowner to homeowner, investor who bought an REO and is now flipping it, or obviously the traditional sales. And then last but not least, distressed property, which we all know the big three. REO, short sale, and foreclosure. And I don't know how many in the room practiced in the distressed property industry, but we'll get into that quickly. So the next slide. I'm not going to really reiterate a lot of these slides. Again, I know that my time is limited, but I wanted to share some figures with everybody. If you want a copy of my presentation, just email me. I'll email the slides for you if you want the documentation that supports it. But something that's really important that I wanted everybody in this room to take a notice at, the dollar per square foot for new construction versus distressed in the same county. And I'm going to tell you, statewide, it may vary a little bit, but not by much. The resale figure in the middle is kind of an average of single-family homes and condominiums, but it's not really much better. Resale and condominiums are about $450. This should give everybody pause, okay? And the other thing that I wanted to show, especially, what we're talking about now is the discrepancy in Florida specifically, which is still #1 in foreclosures nationally. We don't want to talk about it, but it's still happening. Miami-Dade is a really good idea where recently we're in the top 3 luxury markets in the United States, but 20% of the mortgages are still underwater. Okay, so it's really important that in forums like this, and I applaud this for being put on today, the whole county has to move forward, not just the people living on the water, okay, in order for this to be sustainable and positive growth for all of us. Next slide, please. Okay, the new Miami construction market, next slide. Again, what we're seeing right now is pretty indicative of what we're going to see for the next couple of years, and it has to do with the fact that the new construction market, what's been closing now, went under contract a 1.5 years, 2 years ago. Okay, that is dramatically changing. And I understand that we're talking today about really resale and distressed property, obviously with Freddie Mac here. But you have to understand the top of the pyramid to understand how this is going to affect all of us and the homeowners that you are helping find new properties. And the reason why is, at the very bottom, you're going to hear, I always love when a developer says that there's going to be a mini correction. Well, I'm not really sure what a mini correction sounds like. It sounds to me, if they're saying 1 to 3%, we're already seeing the prices on the new construction come down. We need to see how that's going to have a ripple effect. The next slide. It's really important because we have to remember new construction, the closings, 95% are international buyers. What that tells us all is it's very subject to change, very volatile. So the economy for new construction, especially the high end, is going to be driven by Brazil, Argentina, Europe, and what happens the minute the US dollar goes stronger, you've almost eliminated all those markets, which is what's happening now. You're talking about the more condo projects are occurring. It's interesting, in 2014, there were 16 new projects started downtown Miami. In 2015, there's only 1 starting, and we've already seen a cancellation of 1. But yet, in 2015, all those condos that were being built are hitting the market. And something that's really important to know is only 70% of those are sold. Now that sounds like a lot, but if you understand with new construction, and it was interesting, I had the pleasure of walking and talking to some of the lenders, there isn't financing for those properties, okay? The banks all got burned the last round, right, with the distressed. The liquidations that were happening in these new projects or new projects that didn't get completed. So institutional lending is not going in. Meaning, if they're only closing on 70%, 30% of that building is waiting around for an all-cash buyer to come in and drop $700,000. And if that doesn't happen, that means 30% of the building sits empty with nobody paying maintenance fees. Okay, so these are things to be aware of. Next slide. And this is what's so important that I think we all need to realize in this room. How many of our buyers that are looking for properties now are in the construction trade? They're working on these projects, or they work for the cement companies, or they're in some way ancillary to the construction boom. Miami is so tied to real estate and construction. So it's really important when you're talking to your buyers when we go to the next 2 sets of properties about what they're seeing their foreseeable income to be and being realistic about it. The other thing is, obviously with US dollar becoming higher, we may see a reduction in tourism. Again, talk to your buyers. If they are working in the tourism trade, hospitality, etc. and so forth, and I'll discuss that a little further as we go on. But most importantly, if you see the last quote, obviously we all know the Related Group. They have put up some amazing projects. As a matter of fact, I had the privilege of doing an event with them in April. Wonderful organization, and I really appreciate the honesty that he's sharing right here, which is they're already recognizing the slowdown that they're putting off projects marketing for 20 to 25 months. So when you begin to see that they're recognizing, and of course the Related Group has the staying power to be in it, us as real estate professionals now need to look at our businesses and the people that we work with and begin to evaluate how are we going to continue moving forward with our business. So this brings up now what's a little more relevant now that I've kind of gotten into the backdrop of what I'm looking at for Miami-Dade as well as Florida in total over the next few months. This is the resale trends. Obviously one of the big goals with resale is identifying your buyer or your client. I mean, we all want listings. We were talking about how there is a shortage of properties, and as you can see, the first 2 points, we're going to see a reduction in prices. I think everybody was so happy to think we had the distressed problems behind us, right? That we've gotten into this boom, and you see all these wonderful projects closing around the state, and everybody, we all like to hear that there's these, in the Four Seasons, they just closed a $40 million property. It's gotten all these home buyers excited. And I heard someone talking about appraised values and appraisals. We're now seeing this as a consistency that sellers consider their homes worth much more than what the appraisals are coming in at. And I'm seeing a lot of heads going, yeah, okay. And some of that is just fatigue, let's be honest. They watch their properties plunge, right? And now they're seeing they can get some money out of it. But we have to be very careful. When you are listing, you know, I work with agents all the time. I have the privilege, but high-flying a listing in this market now is really doing you a disservice and your seller a disservice. The reason why, they don't have adequate expectations of what that's going to appraise for. And we all know lending standards. It's wonderful to have banks here so we can go up and say, you know, what are products you're offering, what kind of criteria. But it has to start with sellers who are going to take a fair market value for their house. Okay? And so I really encourage agents, you know, I know it's hard when they're saying, but I have a pool and they didn't, so it must be worth $50,000 more than the last comp that sold, right? We've all been there, we've all been there. But it's important to realize you're not doing them any favors. And of course, we're all seeing the trends now with the lending, with the reduced down payments. The other thing I'm going to bring up, and just as a side note, there is a lot of non-banks coming into the lending market. This is something to really educate yourself on, and also discuss with your buyers when they're looking for loans. There's pluses and minuses to that. I won't go into one versus the other, but I would say to everyone out there, spend a little time and understand what the differences are between the two and the regulations of the two. Next slide, please. Coming back to the national housing trends, it's something that's really important to see, again, talking about Sheba. Yes, black households really took the brunt of what happened. And unfortunately, it's really done two things in my opinion. One, it's intimidated that segment of our community to getting back into the buying game, right? They watch their neighbors lose their house, they watch them lose all their, you know, their life savings, etc. and so forth. You know, I saw a lot of mothers who had paid off homes take mortgages out so their kids could go speculating on real estate. And not only did the kids lose the real estate that they speculated on, but their mother lost the family home. So those are really hard things to recover from. And so really the goal should be, the trend is, you know, the Hispanic community is coming back in a huge way with home ownership being a priority. Again, I think that what you're doing is so important because educating how a home can be an investment when done correctly is very important. The next slide. So a couple opportunities, can't be all downers, right? Next slide. One of the great things about working with distressed homeowners is the fact that if they short sold their homes in 2009, they can buy again. And so those of you who are working in the distressed property, we're talking about boomerang buyers now. As the wonderful thing, as the 7 million people, it says up there, 18% at the end of 2014 qualified for underwriting to come back and buy again. And these are people who wanted a home. You know, they only short sold their home or lost it to foreclosure because they had no choice or thought they had no choice. These are people that you touch base with again. I know a lot of wonderful, wonderful agents who gave of themselves and really helped the communities by working out either loan modifications or short sales or, you know, deed and liens. And those customers really are back now. So a lot of positive things. You can see the quote at the bottom from TransUnion. Even the credit bureaus are seeing that as a positive. The next slide. One of the other things I don't think you can escape if you pick up a newspaper anywhere nationally, Millennials. It's kind of funny because I think, you know, I'm definitely not in the millennial category. But as you can see, there's 81 million people. They are going to be larger than the baby boomers. This is huge. The other thing that's really important about them is most of them are well educated. And you're looking at most of them, you know, your large percentage are now minority. And so we have such a wonderful, diverse generation coming forward that really needs your talent. You know, the real estate professionals, again, to provide them with education because they have the tools. They have the education, they have the technology, but they live through the economic recession, and they don't understand the value of home ownership. So this is another budding opportunity for agents and real estate professionals in order to build their business nationally. Next slide. A couple big shifts that we're going to see, at least in my opinion, and it all starts with educating your buyers on these main points. One of the things that I thought it was great, and I apologize for not being able to recognize the gentleman who mentioned it, but the idea is educating the buyers when they buy that if they get in trouble, if you lose your job, if there's a death in the family, God forbid, or something happens, and you can't make your mortgage payment, just don't ignore it. There are solutions for it. I think that, again, what really happened in 2007 is what led me to write a couple books and really work on educating is getting the word out that the lenders will work with you. Agents will educate you. National associations will stand by you if you get stuck. Just don't give up. And I think that that's important now as, you know, as I began my presentation talking about we're looking at a transition into 2014 into 2015 with the new construction and the ramifications of that. I think when your buyers are purchasing now, being realistic that life change sometimes happen, economic change sometimes happen, and giving them the tools of saying, I'm always here for you, no matter what happens, call me, is a great key and a great builder for your career. Next slide. Here is some real important things that I would like to, coming back to obviously the intent of legislative and what, since I have Freddie Mac in front of me talking about going to the Hill. One of the important things I'd love to see federal and local policy deal with is we're going to have a huge elderly population, which is a positive. These are people who really have lived their lives, put back into the community, and have a lot to offer. I'd like to see some policies to help them stay in their home. Whether that be local programs to help them modify their homes with ramps or handicap. Home maintenance. One of the biggest things we see when people begin to age, they have to choose between putting a new roof on or paying for their medication. And as we all know, what happens when you don't put on the new roof or don't paint the property, the value of the property goes down. Which impacts, obviously, their ability to maintain the home and their wealth, because so many elderly people, the home is the primary source of their retirement income. So I'd love to see programs like that. Obviously, we've all heard about the rapid renter growth. I think the important thing to realize on this aspect is encouraging lower income new construction for lower income buyers. Moderate income buyers, different programs. I know Dade County around the state of Florida are really offering it. Again, it's beautiful to see the wonderful new buildings on downtown Brickell, but we don't want 98% renters in Miami-Dade County. We want local communities of owners who maintain and preserve their community area. And then finally at the bottom, obviously, which is talked about quite a bit, is the lending standards. And one of the things I think is really a wonderful opportunity, and I know that this afternoon you're going to talk about down payment assistance. You know, every culture has a different family structure, and one of the interesting things that they're talking about is more than 2 income households. Okay, and we see that a lot in Dade County, but that isn't always considered in underwriting criteria. So maybe it is time that we begin to look at some different options as far as if there's you have the mother or the grandmother and the 2 parents, and they're all working and supporting the household. Maybe that should be considered when applying for a mortgage. And finally, distressed at-risk real estate. Next slide. I know we don't want to talk about it. We wish it was all gone. We wish it would be over. But it is not, unfortunately. I've been doing this for a while, and I'm probably now seeing more REO closings and short sale requests than I've seen almost all of 2014 at the pace. So why is that so? Next slide. Of course, we have the three. Next slide. In Miami-Dade County, depending on where you look, I know the first slide, we know for sure, like I said, there's about 20% that are at risk. 17.2 undervalued, but the next 2 points are what's really important here. 36% of those are 100 to 120% undervalued. That's not so bad. 64% of the homes that are underwater are over 120%. I'm going to tell you, no matter what kind of recovery we have, those homes will always be a short sale. Always. By the time you figure in closing costs, they are so underwater by $50,000 to $100,000. No amount of time with them living in that property is that going to change it. And it's something to be really honest, because, next slide. Nationally, okay, this is nationally, and this is from DS News. Every morning I get 3 different electronic newspapers from the mortgage servicing industry with the current things going on. And if you look at what this is, when they talk under equity and near negative equity, you're looking at still almost a quarter of the mortgages in America are at risk of being undervalued. So what does that say? One of the first slides that we talked about is we're now seeing a correction of 1 to 3% in reduction of price. So if you were near or under equity, you're now really undervalued. Next slide. So what we're going to see, and this is why I know we don't want to talk about it, and as I said, we have to acknowledge what's still reality. There are still communities at risk. And I know that a lot of the tools that were here several years ago to help those in the distressed industry have disappeared, but they're not all gone. Please make sure you work with your clients on both sides. If you know someone who is struggling in their house, have them short sale it now. Seriously, if they're struggling, if they haven't been making their payments for a while, they've been living for free, which is wonderful. They really should consider short selling now, because a lot of the government programs are going to be wrapping up, and then they're going to really be in a pickle. Next slide. So basically, to kind of summarize this, again, I know Robert's coming after me and will probably shed more light on this. Really what I see, practicing day to day and working, we're going to see the high-end luxury cash sales slow. They already are. The first project has already been tabled. Ion and Edgewater has been tabled. They were talking about the Brickell City Center, where they used to see 100 people a day. They're seeing, 4 or 5. Okay, and that's the Miami Downtown Development group that is sharing that information. You're going to see some sluggish. The cash sales. I understand it's got to be really hard competing against those all-cash institutional buyers, the investors who are coming in and buying these REOs. Unfortunately, it's really forums like this that are showing you what the lenders have to offer for your clients. I applaud them, especially when they talk about down payment assistance and other things you can do to ensure that a homeowner for their primary residence gets in that home, because lending is probably going to stay pretty restricted for the near future, especially with the numbers I've been seeing nationally. I don't see the big institutional guys really going very flexible. And last, unfortunately, if a quarter of the mortgages are underwater or at risk, distressed property is going to be here for a while. Okay, and if we have any little shift, be there to protect your clients. I know at my office, I still process short sales for free if you close with me. I also field emails. I'll give you a free email, legal advice, if you're stuck and don't know what to do. And I know there's still other practitioners out there locally and nationally to help your buyers and sellers. I would encourage you, if you have the opportunity to buy a short sale or get into that market and work with them, and you have a buyer who has time, normally short sales are about 6 months, please do it. It's a wonderful community builder. Here's kind of my suggested game plan identify millennials, boomerang buyers to help continue so that when you are able to stabilize, you don't have big swings with the new construction. And next slide. And that is my contact information, my Facebook page. Like I said, seeing some great trends. But again, my goal is for all of you that you have a profitable and consistent business. And I think working with some of these statistics that I shared today will help.